welcome to lecture number 1 of subject Indirect Taxation. Now, indirect taxation, according to the VTO syllabus, it is covered into 60% theory and 40% problems. So problems are basically in 3 units, that is unit number 2, unit number 3 and unit number 5. Rest all the units are only theory related. So module number 1 or unit number 1, you'll have introduction to goods and service tax. This module is exclusively only theory module where you'll be having the basic concepts relating to goods and service tax, that is GST. Unit number 2, you'll have levy and collection of tax. Now, what do you mean by levy and collection of tax? It means that when should GST be charged, and the GST what is being charged, when will it be collected by the government, or when should the tax collected by the customers, collected from the customers, be deposited to the government. So this module deals with all levy and collection of tax. Module number 3 is, and module number 2 includes your problems as well. So module number 2 is a combination of theory as well as problems. Module number 3, we have time and value of supply. So under this module, we'll be seeing that what is the time at which GST is to be charged. Should it be charged when the order has been placed, or should it be charged when the actual sale is taking place? So at that time, you're going to see what is the time of supply on which GST has to be charged, and value of supply means on what value should GST be charged, what should be inclusive in the value, what should be exclusive in the value, and what should be the correct amount on which we have to charge GST. That will be seen in module number 3. And module number 3 is again a combination of theory as well as problems. Module number 5 is input tax credit. Now, what do we mean by input tax credit? We know that there are two types of taxes. One is an output tax and one is input tax. So output tax is usually a tax that is being collected on the sales. So output, that means when you are selling the goods, and input means when you are purchasing the goods. So at the time of purchase, whenever a dealer is paying the tax, government is giving him a credit of it. So under this module number 4, we will be seeing what is input tax credit and who is eligible to take the credit on the purchases. So always remember, output tax is a tax on sales and input tax is a tax on purchases. So that concept relating to input tax is covered in module number 4, which is again complete theory. Module number 5, introduction to customs duty. Under this, again, we will be having to know what are the basic definition, basic concepts of customs and different definitions which are covered under customs, and when is custom duty to be levied, what are the exemptions of custom duty, what is the value on which we have to charge custom duty. So everything will be covered in module number 5. Again, module number 5 is a combination of theory as well as problems. Module number 6 is import and export procedures under customs. So under this import and export procedures under customs, we will get to know what are the different procedures when we are importing or exporting any goods, baggages, and what are the allowances that are being given by the government in respect of import and export. So these are the several modules that we have and that we will be studying under indirect taxation. So as you all can see that module number 1 to 4 is totally related to GST, whereas module number 5 and 6 is related to your customs duty. So we begin today with the module number 1, introduction to goods and service tax. So in this module, what are the things that we are going to cover and understand is, this module covers the GST, GST model and the different acts which are under GST, that is CGST, SGST, UTGST, IGST Act, goods and service tax, net worth, which we call it as GSTN, and GST Council guiding principles and functions of GST Council. So students, this particular module is complete theory module. So if you all are paying 100% attention on the theory that I'm explaining, you can write it in your own words in the examination. So I want everyone to pay complete attention to the theory that I'm explaining. So in today's lecture, we will be covering what is tax and what are the different types of tax, what is the features of indirect tax, what are the taxes that are subsumed under GST. When I say subsumed, it is nothing but replaced under GST. So GST has replaced which are the different taxes that are being replaced by GST. GST, a basic introduction, need for GST, components of GST, and dual concept of GST. So these are the things that we'll be covering today. So moving ahead. So what is tax and what are the different types of tax? So students, as we know, tax is nothing but it is a financial charge, or it is an amount that is charged by the government, okay, from the persons. And the government is collecting tax in order to create a fund, and with the amount that is collected in the form of tax in this fund, it is utilized by the government for different public expenditures. So tax is nothing but an amount or a financial charge, you can see, that is collected by the government and from the persons. Now, this amount is collected by the government in two different categories. Directly from government directly collects the tax from the persons, it is called direct tax. And when the government collects the tax indirectly from the customers, consumers, persons, it is called as indirect tax. So remember students, what is tax? Financial charge that is being collected and levied by the government, and it collects the tax in two forms, directly and indirectly. So there are two types of taxes, direct tax and indirect tax. So let us see. Direct tax is nothing but when person pays tax directly to the government. There is no middle party in between. So the person directly pays tax to the government, it is falling under direct tax. And when the person paying tax to the government collects the tax from ultimate consumer, it is indirect tax. That means when you go to a shop and you purchase any product, on that product you're going to pay a tax, that is GST. So that shopkeeper is going to collect the tax from you and give it to the government. So the shopkeeper is just acting as a middleman between the government and the person. So this is indirect tax, where the tax is paid by the person but not directly, indirectly through the shopkeeper to the government. Next, direct tax is progressive in nature. When we say progressive in nature, it means that as we have already seen in third semester, that the tax slab rates for an individual is different depending on his income. So higher the income, higher is the tax rate that we have seen. So it is progressive in nature, which means high rate of taxes for people having higher ability to pay. Similarly, indirect tax is regressive in nature. When I say regressive in nature, it means that irrespective of the income earning capacity of an individual, the tax charged is the same. So when suppose you go to a shop to buy, suppose if you go to a shop to buy a furniture, and even a rich man, suppose a middle class man also goes to a shop to buy the furniture, and the rich society people also go to the same shop to buy the furniture, the tax charge on the furniture by the shopkeeper to the consumer, to the any type of consumer, will be the same. There will be no difference of tax rate depending upon the ability to pay. So regressive in nature means all the consumers will equally bear the burden irrespective of their ability to pay. Next, direct tax is borne by the person himself. So the person who is going to pay the money to the government, he himself is going to bear the payment. Whereas indirect tax, burden of tax is shifted to another person. In indirect tax, the shopkeeper is supposed to pay the tax to the government, but he is shifting the burden to the ultimate consumer. So this is the meaning of tax and what are the different types of taxes. Now, what are the features of indirect tax? Now, when I say what are the features of indirect tax, it means how indirect tax is different from direct tax. So it is an important source of revenue. See, government gets its source of revenue only through the form of tax, and we know that it is either through direct tax or indirect tax. But according to the statistics, indirect tax revenue is much more higher when compared to the direct tax revenue what the government is receiving. So it is one of the major source of income received by the government. More than 50% of whatever total revenue the government is earning, it is in the form of indirect taxes. It is a tax on commodities and services. See students, as we know that direct tax is levied on income. It is levied on income of an individual. But indirect tax is never levied on income. It is levied on the commodities and services that we are availing. So indirect tax is levied only on goods and services. Next, shifting of burden. As we know that the burden of tax is shifted to the ultimate consumer and not to the dealer who is actually dealing in the goods or services. So here in indirect tax, the burden is always on the ultimate consumer and not on the dealer who is making the payment. So there is a shifting of burden. No perception of direct pinch, which means what? Now, many a times you'll go and purchase. Suppose if you're going and to purchase some commodity in the market, and you'll purchase that particular product. Suppose if you are purchasing a soap, and suppose if the soap cost is rupees 30, so you'll pay 30 rupees and you'll come back. But in that 30, it will always be written inclusive of GST or inclusive of all the taxes. So you all don't get the direct pinch of paying the tax since you all are directly paying 30 rupees and coming back, which you all don't know the bifurcation of what is the tax amount and what is the basic amount. So therefore, it doesn't hit you all much because you all are not aware about the tax amount that you all are paying. So since the value of indirect taxes is already in the price of the commodity, so the most of the taxpayers will not feel or not know that he's actually paying tax to the government. So when he actually doesn't realize that he's paying tax to the government, there is no direct pinch of paying the tax. So indirect taxes, usually there is no direct pinch. Next, it is inflationary. What do you mean by inflationary is, now since indirect taxes is levied on the commodities and services, now what happens is when indirect tax rates are increasing, obviously the price of the commodity and services also increase. And when there is an increase in the price of the goods and services, what happens? There is an inflationary trend that is created. So obviously, if there is an inflationary trend, one of the reasons may be because of the indirect tax rates. So indirect taxes also can lead to inflationary situations. Next, wider tax base. Now, in case of direct tax, it is only we know that income tax is falling under the category of direct tax. But unlike indirect tax, like in indirect tax, we know there are the hundreds of commodities and hundreds of services that are covered under indirect tax. So it has a very wider tax base because it does not cover few elements. There are different multiple goods and services that are falling under the category of indirect tax. Therefore, it has a wide tax base. Next, it promotes social welfare. See, how does it promote social welfare is because indirect taxes are also levied on sinful products. Now, when I say sinful products, it means the products that are not good for the society. Like you can say alcohol for human consumption, or you can say cigarettes, or you can say tobacco, gutka. It is not that good for the society. So indirect taxes is also levied on such sinful products. So when it is levied on such sinful products, the prices of those products will obviously be high. And with this, the consumption can be a little low. In this way, it can indirectly promote the social welfare. Next, regressive in nature. When I say regressive in nature, again, which I've already explained earlier, that the rich and the poor have to pay the same rate of indirect taxes on the products, on the commodities and services that they are availing. And the disparity between the rich and poor, there is no disparity. Indirect taxes, you rich or poor has to pay the same rate of tax. So I hope you'll have understood what is the feature of indirect tax. Okay. So students, after my explanation of what is the difference between direct tax, indirect tax, can you all tell me GST, that is goods and service tax, whether it is falling under the category of direct tax or indirect tax?
Indirect.
Indirect tax, ma'am.
Now have you all understood why it is falling under the category of indirect tax and what do you mean by indirect tax?
Yes,
Yes,
ma'am.
ma'am.
Okay, so moving ahead. Taxes subsumed under GST. When I say subsumed means which all taxes have been replaced by GST. Means earlier, like GST came into picture on 1st July 2017. GST was implemented on 1st July 2017. Before 1st July 2017, there were multiple taxes. GST came into picture and took away those multiple taxes, and now there's only one tax, that is GST. So let us see what are the different taxes that has been replaced by GST. So first, service tax. It is not in order, I'm just putting it in any order, but these are all the taxes which I'll be explaining which are being replaced by GST. So service tax. Before 1/7/2017, that is before 1st July 2017, there was a tax that was levied called as service tax. If you are not aware, service tax was a tax levied on all the services that were being provided by the service provider. So now, after 1/7/2017, this service tax is no longer alive. Service tax has now been replaced with GST. So today, if any service provider is providing services, he doesn't charge service tax, he will charge GST. Next, excise duty. Before 1/7/2017, excise duty was levied. Now, can anyone tell me excise duty was levied on what? It was usually levied on the manufacture of goods. So when any particular manufacturer used to manufacture commodities or goods, it used to charge excise duty. But now, after 1/7/2017, the manufacturer will charge GST and excise duty is no longer into picture. So excise duty is also been replaced by GST. Next, VAT. VAT was nothing but value added tax, and this VAT was charged for intra sale of goods. Purely whenever there is a sale of goods within the state. When I'm talking within the state, you're selling some goods, that is before 1/7/2017, there was VAT that was being levied by the dealer, but now this VAT has been replaced by GST. So now if there is any sale of goods within the state, GST is being charged or levied. Next, luxury tax. Now earlier, luxury tax was being levied. Now, what do you mean by luxury tax and what was the purpose of this levy of luxury tax? Before 1/7/2017, luxury tax was levied on all the luxury commodities. When I say luxury commodities, means they are non-essential commodities. They are not a necessity product. They are luxury items which are usually affordable by the high class society, like staying in a 5-star hotel, taking high standard facilities there, okay, which is not a necessity, it is just a luxury for high class people, okay, and which is not usually affordable by all. So for availing those high class facilities, luxury tax was being levied. So now this luxury tax has also been replaced by GST. Next, octroi duty. When I say octroi duty, it is usually it was usually a duty that was levied on the entry of the goods. So on interstate transaction of goods from one state to another state, at the point of entry of goods, at the point of entry into the state, octroi duty was being levied earlier, but now GST is being levied. Next, CST. Earlier, central sales tax was levied. Now, why was this levied? This was levied for all the interstate supply of goods. So, when any sale used to happen, which was an interstate sale, so the dealer or the shopkeeper used to charge central sales tax. But now this central sales tax has been replaced by GST, and GST is being levied now for all the interstate transaction of goods and services. Next, entertainment tax. So again, earlier there was one more tax, that was entertainment tax. Now entertainment taxes was levied for all the entertainment purposes, like multiplex theaters, on the movie tickets, on museum, when you used to go to any museum, or maybe any large commercial shows that are happening, or any festival celebration which is happening in a large scale. So for all the entertainment purposes, there was an entertainment tax that was being levied, but now it is being replaced by GST, and GST is being charged. Next is additional duty of customs. Students, this is very important, that under customs duty, there are different types of duties that are charged: basic custom duty, additional custom duty, countervailing custom duty, safeguarding custom duty. So out of all the customs duty, there is only one custom duty that has been replaced by GST, and that is additional duty of customs. Rest, basic custom duty is still alive, still basic custom duty is being charged, but only additional duty of custom is being replaced by GST. Rest, all the duties relating to customs are still charged. They are not replaced by GST. So in respect of custom duty, only additional custom duty is being replaced by GST. Now what is the meaning of additional duty of custom? Why was this levied? This was levied because government wanted to stop the import of goods in order to promote Indian products. So what did the government do? That it started charging additional duty of customs on all those imports of goods and services which could have been manufactured in India as well. So if it could be manufactured in India, we would have charged excise duty. If it would been traded in India, the goods were traded, we would have charged VAT. If the services which we could have procured within India, we would have charged service tax. So government is saying, since you are getting all these outside India, I'm going to charge additional duty of customs which will be equivalent to the taxes that we are collecting in India. So now all these also has been replaced by GST. So these are the different types of taxes that are being replaced under GST. So now you all can understand that before GST, there were so many taxes a particular individual had to pay, but now it has to pay only one tax, and that is goods and service tax. So students, is this slide clear? Now, none of these taxes are levied after 1/7/2017. All these taxes are now over. All these taxes are now replaced by GST from 1/7/2017. Is this clear, students?
Yes, ma'am.
Okay. Moving ahead. Now, we have seen what is an indirect tax. We have seen what are the taxes that are replaced by GST. Now, what is GST? Now, it's very important for us to understand what is GST. So we know that GST is an indirect tax which has replaced many indirect taxes in India. The Goods and Service Tax Act was passed in the Parliament on 29th March 2017, but the Act came into effect only on 1st July 2017. So after 1st July 2017, only GST was there into picture, and all the taxes prior to 1st July 2017 are no longer into picture. Now, next, Goods and Service Tax law in India is a comprehensive, multi-stage, destination-based tax that is levied on every valued addition. Now, let us understand what is comprehensive, multi-stage, destination-based tax. Students, when I say GST is comprehensive, means it covers a wider base, means it covers multiple goods and services, it covers multiple taxes into one. That is why we say that GST is comprehensive. Next, multi-stage. See, GST is levied at each and every stage of the goods through which it passes. Like taking from the manufacturer to the wholesaler, GST is charged. From the wholesaler to the retailer, from the retailer to the final consumer. So at every stage, GST is being charged on the value that has been added to the commodity or services. That is why it is called on every value addition. Obviously, the manufacturer will purchase raw materials and will manufacture a product. So the raw material, there is some value added to it, which converts it into a final, which converts it into a product. So on that value addition, GST has been charged. That particular commodity is again passed on to the wholesaler. The wholesaler will again mark up his profit margin. So there is a value addition. Then the wholesaler will sell it to the retailer and the retailer to the final consumer. So GST is levied. It is called multi-stage levy on every value addition that is being made. Now it is destination-based tax. Now what do you mean by destination-based tax? When I say destination-based tax, it means before 1/7/2017, students, I'm talking earlier, old, when there was no GST regime, that is pre-GST regime. In pre-GST regime, it was origin-based tax. Now what is this? Let me explain you all with the help of an example. Suppose I am a dealer in Karnataka, okay, and I'm a seller and I'm selling the goods to a person in Maharashtra, to a person who's going to utilize the goods in Maharashtra. So in my in the pre-GST regime, which is the tax that I'm going to charge, students? I just explained you all in the earlier slide. When I'm selling the goods from one state to another state, I'm obviously going to charge a tax. Now, in the pre-GST regime, which tax was I charging?
CST.
Central sales tax. Very good. So I was charging central sales tax. Now, whatever central sales tax amount was being collected by the purchaser, this amount used to go to the Karnataka government. Since the goods were origined from Karnataka, the seller is from Karnataka, the goods are origined from Karnataka. So Karnataka state government used to get the money of the tax. But after GST, what started happening is GST became destination-based tax. That means that the seller state won't get the amount of tax, but the buyer's place, the destination where the goods are going to reach, that state government is going to get the GST amount. That is why GST is destination-based tax. So let us take the same example. I'm a seller in the state of Karnataka. I'm selling goods to a purchaser in Maharashtra. I'm selling the goods to Maharashtra. Now, and I'm going to charge GST. Now, which state government is going to get the tax amount? It is the Maharashtra state government who's going to get the tax amount, because the goods are destined to Maharashtra. I'm selling the goods to Maharashtra. The consumer is in Maharashtra. The Maharashtra is the purchaser in Maharashtra is going to consume the goods in Maharashtra. He is the buyer there. So GST is going to be given to the Maharashtra government, not to the Karnataka government. So this is a change that has happened in GST. GST is a destination-based tax, that is consumption-based tax, and it is not origin-based tax. So have you understood this, why it is comprehensive, multi-stage, destination-based tax on every value addition? Is this clear?
Yes, ma'am.
Yes, ma'am.
Okay, next. So in simple words, we can say GST is an indirect tax which is levied on the supply of goods and services. And this law has replaced many indirect tax laws that previously existed in India and which no longer exist, that we have already seen in our earlier slide. So indirect tax, so GST is one indirect tax for the entire nation. So this is already explained. So moving ahead. So what is the need for GST? This is very important again. Why was GST required? What was the need for the government to replace so many taxes and bring in GST? What was the idea behind that? Why GST was introduced? Why GST was implemented? And what was the need to bring GST when already so many taxes were already in existence? So what was the requirement? So let us see. Sorry. First is to remove the cascading effects. Now, when I say cascading effects, what do you mean by cascading effects? Cascading,
Repetitive.
correct. Cascading, very good. Cascading effect is nothing but, in best language I can describe it, as a tax on tax. So earlier, there used to be tax on tax and tax on tax. Like, let me just give you all one example. Earlier, when the manufacturer used to manufacture goods, he had to first purchase the raw materials to manufacture the goods. So he used to pay VAT. He used to pay VAT, and then when he used to manufacture the goods, he had to again charge excise duty. Then when he's selling the goods to the wholesaler, then he's going to either charge VAT, depending if the wholesaler is in the same state, or if he's interstate, he's going to charge CST. So what was happening is, there was tax on tax. Like, he's already paid tax on the purchases, but when he's going to sell, he's going to fix the selling amount by adding the tax that he's put on the purchases, plus the tax that he's going to collect on the sales, plus excise duty. And then the wholesaler will again pass the same to the retailer, and so on. So there was tax on tax at each multi-stage, which was there in the pre-GST regime. But now, GST, with the introduction of GST, this tax on tax effect has been eliminated. Now, let me tell you all how it has been eliminated. Now, what happens is, what government says that if a person is purchasing the goods, whatever tax is paid on the purchases, that will be minused, that will be given as a credit for the taxes that he has to pay on the output. So I told you there are two types of taxes, like output tax and input tax. So output tax is on the sales, input tax is on the purchases. And we get input tax credit under GST, which means on purchases, whatever tax is being paid, that will be given as a credit to the particular dealer. So for example, if the output tax he has to pay is rupees 100, and the input tax he's already paid is rupees 80, so he need to pay to the government only 20 rupees, because 100 rupees is output tax, and he's getting a credit of the tax that is paid on the purchases, that is 80 rupees. So only 20 rupees is a tax that he needs to pay on to the government. So here the tax on tax is being eliminated. Earlier he used to pay 100 and plus this 80 also, so it used to be 180, but now he has to pay only 20. So the tax on tax effect is being eliminated. So did you all understand that it was very important to get in GST, because earlier there used to be double taxation, tax on tax, but now this cascading effect is being removed. So did everyone understand the point number 1?
Yes, ma'am.
Okay, next, increasing threshold. Now, increasing threshold means, in the pre-GST regime, we know there was VAT, excise, service tax. Now, VAT registration was compulsory, or all the dealers needed to pay VAT if their turnover was more than 5 lakhs. Depends on the state to state. Service tax, if their turnover was more than 10 lakhs, they had to take service tax registration and pay service tax. And in case of excise, if their turnover was more than 1.5 crores, they had to take excise registration and they had to pay excise duty. But GST, with the introduction of GST, the limit of 5 lakh in case of VAT and 10 lakhs in case of service tax has been increased to 20 lakhs. Now GST is not required to be paid by everyone. It is required to be paid by only those dealers whose turnover in case of services exceeds 20 lakhs and in case of goods exceeds 40 lakhs. Only they need to take GST registration and pay GST. So earlier it was 5 lakhs, 10 lakhs, which was a very small threshold limit. But now with the increase in the threshold limit, it becomes ease for the small business people. Is this clear point? Is this point clear?
Yes, ma'am.
Okay, next. To provide relief for small businesses. Now see, even if the threshold is more than 20 lakhs, see if any service provider is providing services which is more than 20 lakhs or 40 lakhs in case of goods, he needs to take GST registration. But GST also has a concept of composition scheme, which we'll be seeing in the earlier lectures. Composition scheme is even if the business turnover is more than 20 or 40 lakhs, but if his turnover is less than 1 crore or 1.5 crores, some relief will be given to the such businesses in respect of payment of taxes to the government. So under GST, there is a concept of composition tax which provides relief for the small businesses. Next, reduce procedural compliances. See, earlier there was VAT, excise, service tax, there was multiple taxes, right? And every particular tax regime had different types of compliances. Like excise, you had to file the return monthly. Service tax, you had to file the return monthly. VAT, you have to file the return monthly, depending on what you are, like either proprietorship, partnership, company. So you had to comply with so many compliances. But under GST, what has happened? The entire GST filing is made online. Okay, there is only one um, return that you need to file for showing your output, and one return that you need to file for making your payment. So, and there is no different types of compliances that you need to follow. GST, there is only one act that you need to follow. So the procedural compliances have been reduced. Whereas in case of VAT, service tax, excise duty, each particular category had separate acts, each particular category had separate returns, separate payments. But now everything is clubbed into one. Therefore, you need to file only GST returns. Since therefore the number of compliances have become lesser. So is this clear, students? Yes, students.
Yes, ma'am.
Next, to next is to ease the process. Now, the entire process of why was GST brought into picture is just to ease the complete process. Because what happens earlier, before GST, what used to happen is there was separate departments of government in respect of VAT. There was separate department. The processing of each and every return used to happen separately for VAT, for service tax, for excise duty. There's different departments. Now all those departments are now only covered under GST. So it becomes an easy process because the format of return filing, the format for payment was different earlier for each category of taxes. But now since it is only one GST, so there is same format for all the types of taxes now, because GST has replaced everything. So the process of assessing all those returns processes becomes easy. So now it is very easy process under GST. Next, regulating the unorganized sector. See, what used to happen earlier in pre-GST era, that many unorganized sectors, like if you see textile businesses, or maybe you see construction businesses, they were very unorganized. When I say unorganized means what? There were a lot of fake billings happening. But now under GST, what has happened is there is a lot of regulation happening in this unorganized sector. Now in case of construction business, if you see, earlier when they used to purchase, they used to not, when they used to purchase goods, they used to show the purchase amount as high amount. But now you cannot hide anything from the government because of input tax credit, and everything is made online. So if a particular dealer is supposed to get the credit, it will be shown online and he's eligible for that particular amount. So let me give you an example. Suppose I'm selling goods where I have to pay tax. That is, my output tax is 100 and my input tax is rupees 80. Correct. So I get a credit of 80 rupees, which will be visible online. Now, earlier in before GST, okay, people used to hype their purchases and show sales very less. But now this thing cannot happen in GST because everything is made online. There is lots of transparency, lots of visibility. Now, if I show my purchases in GST, if I fakely increase the amount of purchases in GST, the GST department can in no time catch hold of me, because from whom I have purchased, he will upload his return, and in his return he will obviously not show more amount because his sales will increase and he has to pay more amount of tax. Therefore, GST mechanism has made a regulation in even those sectors where lots of fake billings, or lots of transparency which was not there, is now being regulated by GST. So is this clear, students?
Yes,
Since
ma'am.
everything is made online, since everything is visible, since each party has its own GSTN number, since whatever you are uploading, that is the only credit amount which you can get. So with all these factors, no one will even try to make any fraud in case of the billings, because now even in your news you all can see that if there are many people who have been put into bars because of the fake billings. And why? Because this is easily visible, easily transparent. Since it is online, everything is clear. The GST department can in no time catch hold of people who are doing fake billings and fake invoices. Therefore, there is a lot of regulation happening in even those sectors which were unorganized earlier. So, is this clear? What was the need for bringing GST into picture? Yes, students?
Yes, ma'am.
Yes, ma'am.
Okay, next. Now, what are the components of GST? Now, when I say we have to charge GST, now what do you mean by what are the components of GST? Usually, GST is falling under four different heads: CGST, SGST, IGST, and composition cess. So, CGST, SGST, IGST, UTGST, and composition cess. Now, what do you mean by CGST? CGST stands for Central Goods and Service Tax. SGST stands for State Goods and Service Tax. IGST stands for Integrated Goods and Service Tax. UTGST stands for Union Territory Goods and Service Tax, and compensation cess. Now, what is all this? Just let me quickly explain you all. Any dealer, any shopkeeper, any trader, any manufacturer will charge you CGST and SGST in the bill amount, in the invoice amount, only when he is making intra sale of goods or services. So when I say intra sale of goods and services, which means if you're selling the goods or services within the same state, if the goods and services are being sold or provided, the shopkeeper, the trader, the dealer, the manufacturer has to charge in his bill CGST and SGST. Suppose if the sale of goods and services is taking place interstate, when I say interstate, that is from one state to another state, so the dealer is going to charge IGST in the bill. And when the sale of goods and services is taking place in the union territory, then you're going to charge as CGST and UTGST. And so what are the different union territories we know? We know that is Andaman Nicobar, Lakshadweep, Pondicherry, Chandigarh. So in all these places, these are all the union territories. Union territories means they don't have their own state legislation. The all the administration and legislation is under the control of union government. So union territory is which is being handled by the central government. But whereas state CGST, they have they are own, that is, each state has its own state legislation. But in case of UTGST, it is called union territory, because these union territories are being administered or are being legislated by the central government. So if any sale is happening in the union territory, you're going to charge UTGST, that is Union Territory Goods and Service Tax, and CGST. And next is compensation cess. See students, compensation cess is again charged not on all the goods and services. It is just charged on the sinful products or on the luxury items. Now when I say sinful products, means like tobacco, gutka, cigarettes, okay. And then when I say luxury items like car, motor vehicles, it becomes a luxury item. So compensation cess is charged only on certain items which are either falling under the category of sinful products, or either they're falling the category of luxury products. So a quick recap of whatever I have told now, that is, the sale is within the state, you charge CGST plus SGST. Earlier you used to charge VAT or central excise or service tax, depending whether it is goods, whether you're providing services, or whether you're manufacturing goods. And what happens in this CGST and SGST, the revenue is shared equally between the central government and the state government. So equally. So suppose if I'm selling a particular part, a particular vehicle part, suppose if I'm selling at 18%. So equal amount of tax goes to the state and central government, which means 9% will go to the central government and the remaining 9% will go to the state government. So under the sale within the state, both the center as well as the state government gets the same amount of tax. Next, sale to another state, in the new regime under GST, IGST is charged, which is Integrated Goods and Service Tax. Earlier, we used to charge central sales tax or excise service tax, depending whether it is goods, services, or manufacturer. But now what happens is, the IGST amount that has been collected, that directly goes to the central government, and then the central government will share certain portion of tax to the state government, depending on what ratio they want to share the particular tax amount. So just remember, CGST, SGST is for the sale of goods within the state. 50-50, that is a 50% of the tax goes to the central government, 50% goes to the state government. And sale to another state, IGST is charged, where the entire money of IGST goes to the central government, and later the center will decide how much should it distribute to the state. So is this clear, students? Is the components of GST clear? Yes? Yes, students? Yes.
Yes, ma'am.
Yes, ma'am.
Next, the last part which we are going to see in today's lecture is dual concept of GST. Now, why GST is being called as a dual concept? Because under GST, both the union as well as state government is administrating the GST. It is not that only the center will get the amount of GST, or it is not only the state will get the amount of GST, or they have their own legislations. But GST is called dual concept because here both the union as well as the state government have to does the administration of GST. That is the reason it is called as dual concept of GST. So transaction made within the single states are levied by the central goods and service tax by the central government, and state goods and service tax by the state government. So both center as well as state have got the equal amount of administration on GST. Next, for interstate transactions and imported goods or services, and IGST is levied by the central government. See, I told you all, when it is interstate transaction, IGST is levied agreed. The entire amount goes to center, that also is agreed. But the center will later distribute some amount of it to the state government. So that is why GST is called dual concept of GST. Earlier, before GST, VAT was totally handled by the state government. Center had no interference in VAT because VAT was totally handled by the state government. Service tax was totally handled by the central government. Entire amount of service tax used to go to the central government. Excise entire amount is to go to central government. So there was no there was single concept of GST where either the amount was collected by the state or center. But now under GST it is a dual concept where both state and center are regulating the GST, are administrating the GST, are collecting the taxes of GST. So students, have you all understood why we say that GST is a dual concept?
Yes, ma'am.
Because now even the center has the power to tax on the intrastate sales, and the states are also having the power to tax the services. Earlier service tax was only central government, but now if the services are provided within the same state, even the center has the right to uh, administer or has the right to regulate the tax on the services. Is this clear? Yes, students.
Yes, ma'am. Yes, ma'am.
Yes, ma'am.
So thank you so much, students. We have completed a portion of a small portion of module number 1. Okay, so can I ask you some questions just to know whether you have understood?
Yes,
ma'am.
Okay, so can anyone tell me what any 4 taxes which GST has replaced?
VAT,
GST, VAT, excise duty, VAT,
excise duty.
Okay, very good.
CST.
duty.
Okay, good. Next, can you all just tell me two needs for why GST was implemented in India, or why was GST brought into picture? What are the reasons? Can anyone just tell me?
To eliminate the cascading effect.
Yeah,
To help small businesses.
yeah, very good. Next is, can anyone tell me if there is an interstate sale of goods in case of pre-GST and post-GST? What are the taxes that are levied when I'm selling the goods from one state to another state in pre-GST? Which is the tax that I was levying?
CGST, ma'am.
CST.
CST, very good. And in GST the time, which is the tax that I'm going to levy?
IGST.
GST. Very good. So thank you so much, students. We are done with the class for today. Thank you so much.